welcome to another episode of Free Lunch here at Zacks. I'm your host, Ben Rains. The historic bull market came to an end last week, and selling continued Monday, with the Dow, the S&P 500, and the Nasdaq all down 12%. In fact, the Dow fell 13%. This marked its second worst day ever, to help it close at its lowest level since May 2017. Monday's market downturn marked the continuation of not just the coronavirus sell-off, but also the volatility. Stocks swung between red and green early Tuesday, but all three major U.S. indexes were up over 2% as of 11:30 a.m. Eastern, with the S&P 500 and the Nasdaq up nearly 5%. With that said, the wild up and down movements look poised to continue given the growing economic uncertainty caused by the novel coronavirus. This comes as more schools and businesses close throughout the country. On Monday, the CDC began to recommend that gatherings of over 50 people should be canceled for up to 8 weeks. Meanwhile, the Trump administration announced new guidelines encouraging the public to end discretionary travel and avoid gatherings of more than 10 people. Wall Street is now wondering what economic stimulus the federal government might provide to help curb the impact of the coronavirus. This came after the Fed on Sunday slashed its benchmark interest rate to near zero, but it also continues to try to boost the market with liquidity. Overall, both cases and deaths outside of China are now above levels seen inside the world's second largest economy. The global death toll is now above 7,000, with 68 deaths in the U.S. Looking ahead, the Wall Street Journal laid out some of the biggest banks' most updated forecasts for second quarter gross domestic product growth. JP Morgan Chase is now calling for a 3% contraction, while Goldman Sachs predicts a 5% decline, and Morgan Stanley's most updated outlook sits at around 4% downturn. But uncertainty is likely to remain the name of the game for now. For instance, last week, semiconductor firm and Apple supplier Broadcom pulled its full-year guidance due to coronavirus uncertainty. Now, in company-related news, McDonald's said that it would close dining rooms in company-owned restaurants in the U.S. The fast food giant is now calling on its franchisees to do the same. This came after Apple, Nike, and other retail giants announced over the weekend that they would close their stores. On top of that, U.S. airlines are now looking for over $50 billion in financial assistance from the government. This would mark more than 3 times the size of the industry's bailout after the September 11th attacks. In some positive news, Amazon said it would plan to hire an additional 100,000 employees in the U.S. as millions of people turn to online deliveries at an unprecedented speed. And Tesla announced that it delivered its first Model Y SUV. The electric car maker and CEO Elon Musk seemed unfazed by the potential economic impact of the coronavirus crisis. And that does it for the news portion of Free Lunch, but stick around for today's Zacks Rank #1 strong buy stock.
For today's tech tip, we will be exploring the Zacks Style Scores system, a proprietary rating system that highlights key fundamental metrics. Pull up any ticker page on Zacks.com and click the Style Scores icon. From here, you will be able to compare the stock's most important value, growth, and momentum ratings with those of its industry rivals and broader group averages. Have a question about using Zacks.com? Send us an email and we might answer it next.
Hello and welcome back to Free Lunch. Today we're breaking down why Applied Materials is a Zacks Rank #1 strong buy stock. Applied Materials is a semiconductor equipment firm. This means that it's a key cog in the ongoing technological revolution, as chips are the backbone of everything from smartphones to cloud computing. Applied Materials beat our Q1 2020 earnings and sales estimates in mid-February, And the company announced just last week that it raised its quarterly cash dividend, citing, quote, a strong cash flow performance and ongoing commitment to return capital to shareholders. So now we're going to jump into Applied Materials. As always, I'd like to start with a quick look at the company's website. As I mentioned, they're a semiconductor equipment maker. So the name kind of says it all. They make equipment that helps make other companies make chips, which, as we said, is kind of the backbone of all of technology, whether smartphones, big data, all of it. Going forward, it's going to continue to play a vital role. So now we're going to go ahead and take a quick look at the company's stock price performance. We can see that it's taken a big downturn along with the rest of the market and the chip space in general. So it's up about 12% over the last 3 years. We can see that they had gone on a more solid run starting at the end of 2018 when the market started to bounce back after that late 2018 sell-off. So over the last year, we'll see that the stock's up about 11%, and obviously it's fallen in the last month. So we'll go and see there. It's down about 32%. So we're starting to get into territory where more and more people are looking at buying these stocks at what we would consider relatively big discounted prices. So along with its discounted price, and obviously anyone who's nervous that the market's going to continue to go down might want to hold off, but we're going to take a look because there might be value for Applied Materials today. So we'll take a look over the last, we'll do 5 years. So this is their forward 12-month earnings estimates. We can see that they're trading at about 9.3 times forward earnings, which marks a discount compared to its industry's about 15.7 times average. And it's continued to trade at a discount compared to its market over the last 5 years. So if we go over the last year, we can see that it's now sitting at its lowest level pretty much over the last year. Yeah, it's at 9.25 times forward earnings, its lowest level. We can see that it's traded as high as 18.6 times with a median of about 14.7. So clearly very solid valuation at the moment, but we know the stock price is down big as well. So now we're going to go ahead and take a look at what to expect going forward. So we are calling for Applied Materials fiscal 2020 sales to come in at about 20% higher to 17.51 billion, and then another 10% higher next year to 19.24 billion. And then the bottom line, we're calling for some solid bottom line movement, 48.6% growth in Q2, 47% growth the quarter after that, 36% growth for the full year, and then another 14.4% growth next year. And despite all of the ongoing economic negativity that's surrounding the coronavirus, we can see that the company has had no negative earnings estimate revisions, and all of them have been positive since they reported their solid Q1 fiscal 2020 results. So we can see 9 upward estimate revisions for the current fiscal year, and then 7 for the year after that. And we can see that it jumped from $3.77 per share all the way up to $4.14, and then $3.38 all the way up to $4.78. So some really impressive bottom line positivity. We can see that they've also beat their bottom line estimates in the trailing 4 quarters as well. And along with that positive outlook and a company that's trading at a discounted valuation, we also can see that the company, as we mentioned, they raised their dividend. It's going to be now, starting this summer, it's going to be a annualized dividend of 88 cents per share. So it's currently yielding a little over 2%, which is solid, way above the 10-year U.S. Treasury and right about the S&P 500 average at the moment. So overall, Applied Materials does look to be a stock worth diving into, but that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. This show will air again next Tuesday, and we also want to let you know that Paper Traders, which is live at 11 a.m. on Wednesdays, will be on a hiatus until April amid all of the coronavirus uncertainty. So once again, I'm your host, Ben Rains, and we'll be back next week with more up-to-date market news and a new top stock pick.